Good afternoon, welcome back. Today is Monday. Yesterday was actually the beginning of Holy Week. And our intro didn't load as it normally does, so there'll be no intro, no outro today. We're just going to cut straight to the chase. Thanks for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live trading broadcasts every trading day. The first one is our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, when Michael joins us in about 50 minutes, he'll walk you through it step by step, a couple times. We'll get your indicators up and indicating today. You'll get 5 consecutive trading days where we treat you just like you were a member, where you have access to everything. Friday, we're not here. Good Friday. Now, while we close on Friday, most global markets are closed on Monday. So it'll be interesting trade Monday because the U.S. will be basically the only participant. But we'll be here. We celebrate Easter on Sunday. And the markets take time off on Friday in observance of Good Friday. So Friday was good for us. Not so good for Jesus, but have you ever thought about the Saturday that hangs between Good Friday and Resurrection Sunday? There's a whole lot of turmoil going on. A whole lot of turmoil. Kevin, I'm very sorry to hear that. I'll be keeping you in my prayers. And your wife, as always. Okay. When the live training room ends each day, we take a 30-minute break and we come back for the afternoon broadcast. This broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, scroll down to where it says noon broadcast, click the link, fill out the 30-second registration form, and you're done. What'll happen going forward, every trading day, about an hour before this broadcast starts, you'll get an email. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you want to get caught up later. The good news, you can do both of those via our YouTube channel. It's easy to remember. youtube.com/CFRN, the Christian Financial Radio Network. But you don't have to remember all that. You've already got the YouTube part memorized, so just remember CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to see how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but it's a great way to see where we started and all that happened over the years right up to today. This broadcast posts to the YouTube channel. It used to take an hour, 2 hours. I think now they've got it down to about 30 minutes. So we're streaming live there, but then it archives once I end the stream. So, youtube.com/CFRN. Okay, this is our daily schedule each and every day on any normal day. And I guess today's about as normal as it gets. The topic of our devotional this week, Holy Week and Easter. For those who don't know, yesterday was Palm Sunday, and for those of you who do know, you might not know why it's called Palm Sunday. Well, we're going to talk about that. Our scripture today is John 12, verses 12 through 19. I'm going to share it with you from the Message translation. The next day, the huge crowd that had arrived for the feast heard that Jesus was entering Jerusalem. They broke off palm branches and went out to meet him, and they cheered, "Hosanna! Blessed is he who comes in God's name. Yes, the King of Israel." Jesus got a young donkey and rode it, just as the scripture has it. "No fear, daughter Zion. See how your king comes, riding a donkey's colt." The disciples didn't notice the fulfillment of many scriptures at the time, but after Jesus was glorified, they remembered that what was written about him matched what was done to him. The crowd that had been with him when he called Lazarus from the tomb, raising him from the dead, was there giving eyewitness accounts. It was because they had spread the word of this latest God sign that the crowd swelled to a welcoming parade. Pharisees took one look and threw up their hands. "It's out of control. The world's in a stampede after him." If you caught the tone of that, they were not happy campers with this Jesus. Now, religion has a lot to do with it, but it's always about the money. Always. So the Sanhedrin, the Sadducees, none of them, the religious leaders of the day, they weren't happy. Now, Palm Sunday, which was yesterday, celebrates Jesus and his disciples arriving in Jerusalem to celebrate Passover after a long journey. Jesus' arrival in the city is often referred to as the triumphal entry. And it was. The crowds cried out, "Praise the King who comes in the name of the Lord." And they sang Hosanna while throwing palm branches and coats on his path. You know how in olden times, in our lifetime, a gentleman would throw his coat across a puddle, a mud puddle, so that the lady would not have to soil that long flowing skirt. Okay? Kind of the same thing. Why was Jesus given this royal treatment? Well, Israel's prophets spoke about a king who would come to the holy city and bring justice and peace to Israel way back in the Old Testament. Zechariah 9:9. When the crowds see Jesus on the donkey, they seem to think that Jesus is God's promised king, the long-awaited Messiah, sent to rescue Israel and establish God's kingdom on earth. But Jesus wasn't the king they were expecting. Many thought this king would honor the temple and its powerful leaders, but Jesus powerfully criticizes the temple system and predicts its collapse. Others hoped Jesus would lead a military revolt as previous, and I'm doing air quotes here, messiahs had done. But Jesus rides in without armies or weapons or war horses. He comes on a donkey filled with patient, peaceful, self-giving love. He shocks people further when he says that the kingdom of God belongs not to the elite and powerful, but to the poor and the outsider. God's kingdom is one where love reigns, love of God and others, including our enemies. Let's pray. Heavenly Father, just as the crowds welcome Jesus with palm branches, we welcome you into our hearts today. Thank you for sending our humble King riding on a donkey to bring peace and salvation. May we recognize his gentle rule and surrender our lives in praise. Hosanna in the highest. Blessed is he who comes in the name of the Lord. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Monday. Let me give you the numbers from around the world. President Trump, right now, as we speak, is speaking with the president of El Salvador, Nayib Bukele. Now, some of you may not know the history of why El Salvador is very important at this moment in time in history. They were the first country to make Bitcoin legal tender. True story. If you don't know that, you should study up on it. And our president is sitting and chatting with him right now. And that might just be why Strategy just added another $285 million to their Bitcoin treasury. Metaplanet beat them to the punch, I think, on Friday. So, anyway, here's the numbers from around the world. Starting with the cash markets, the indices. Dow's up 16 points. Nasdaq's down 7. S&P 500's up 12. The Russell 2000 is up 22. That's almost 1.25%. And we just had a huge reversal. Stocks turn negative as tech bounce from tariff exemption fizzles. Dow erases 500-point gain. Whoa, these are volatile markets. I keep telling you, if you're new, if you're struggling, the best place you can be is out of the market. Now, I just refreshed the data, and I've got the Dow up 55. I got the Nasdaq down 6. Got the S&P up 13. And I got the Russell 2000 down 8. I mean, this thing is incredibly volatile. Let's go one more time. Now the Dow's up 91, the Nasdaq's down 1, S&P's up 14, and the Russell 2000 is down 8. In the commodity basket, crude oil down 43 cents, trading 61.07 last. Gold down $26.70. Trading 32.17 last. That's a drop of almost 1%. And silver's up 9 cents, trading $32. In the Asian markets at the close, the Nikkei posted a gain of 396 points, almost 1.25%. The Shanghai gained 24. The Hang Seng gained 502, 2.5%. And in the European markets at the close, FTSE up 170. The DAX up 500 and, well, the FTSE's up 2.25%, almost 2.25%. The DAX up 580, that's almost 3%. And the CAC up 168, that's almost 2.5%. So it was a green day for Asia, green day for the UK, and the US has no idea what it wants to do. Currently, the Dow up 91. Again, these are the cash markets. Dow up 91, NASDAQ up 5, S&P up 16, make that 18, and the Russell 2000 is now up 22, 1.25%. You just don't want to be trading in that kind of volatility unless you are well versed in what you're doing. So, as I've been saying for a couple weeks, man, be careful out there. Okay? Might be better off trading at night when the markets are a little more tame. All right. Let's look at the news this fine Monday. U.S. and Iranian officials held bilateral talks on Iran's nuclear program in Oman on Saturday, the first such meeting between the two nations since 2018. You're like, what? Biden never spoke to Iran for 4 years? Yes, you've deduced that correctly. The officially indirect discussions ended with a direct exchange between U.S. Special Envoy Steve Witkoff and Iran's foreign minister, which I won't even attempt to pronounce, a move observers described as a compromise since the U.S. had requested direct talks. They're going to keep messing around. The meeting comes 7 years, and pretty soon everybody's going to be eating cake, yellow cake. The meeting comes 7 years after President Donald Trump pulled the U.S. out of the 2015 Joint Comprehensive Plan of Action. The Obama-brokered agreement traded sanctions relief to Iran in exchange for 15 years of uranium enrichment limits and regular inspections of its nuclear sites, which they never allowed. And let us not forget the billions of dollars that were delivered on pallets in cash in the middle of the night, but were never a part of the mainstream news. Now, that's not some conspiracy theory. That is a fact. Google it. Since the deal collapsed, Iran has accelerated enrichment of its uranium stockpile to nearly 60% purity. Weapons-grade uranium requires purity of 90% or higher, while civilian programs need 3.67%. The U.S. wants Iran to end its weapons-grade program and its support for regional proxies like Hamas, while Iran seeks relief from broad sanctions. Good luck. Hardliners in both countries, as well as Israel, a regional foe, are likely to oppose a new deal. Talks are supposed to continue later this week, but I'm sorry to say, folks, I think rockets are going to fly before any deal gets reached there. And as President Trump has pointed out, we hold the better hand. All right, what do we got? Unemployment concerns are on the rise among American workers as fears about the labor market in March reached levels last seen during the pandemic, according to a new survey released by the Federal Reserve Bank of New York today. The New York Fed survey showed mean unemployment expectations among respondents, or the mean probability that the U.S. unemployment rate will be higher 1 year from now, jumped 4.6 percentage points to 44% last month, the highest level since April of 2020. The average expected likelihood of becoming unemployed in the next 12 months increased by 1.6 percentage points in March to 15.7%, the highest level since March of 2024. Wow, did we just bookend Biden's reign? I think we did, 2020 to 2024. The increase was largest for respondents with annual household incomes below 50 grand. Who needs that middle class, right? All you need is the elite class and the servants to pick the fruits and wash the dishes at the French Laundry. The survey, which also noted declining expectations around household income growth, comes as Trump's tariff whipsaw has wreaked havoc on consumers and Wall Street's expectations about the future of the U.S. economy. In the end, he nails it. NVIDIA said today that it will produce up to $500 billion of AI infrastructure in the U.S. within the next 4 years, as the tech industry looks to bolster its domestic manufacturing footprint in the face of Trump's approach to trade policy and desire to onshore more U.S. heavy industry. As part of this $500 billion commitment, NVIDIA said it is building 2 new supercomputer manufacturing plants in Texas in partnership with contract manufacturers Foxconn and Wistron. NVIDIA expects to mass produce supercomputers at those sites in 12 to 15 months. The chipmaker said its latest Blackwell AI chips are already in production at TSMC's plant right here in Phoenix, Arizona. From Bloomberg, the world's 2 biggest economies are headed for a divorce that will likely play out for the rest of this year and beyond, after a month that saw a huge spurt in China's exports and its overall trade surplus hit near $103 billion. Such an increasingly unbalanced flow of commerce is one of the problems that U.S. President Donald Trump says he's trying to fix with his tariffs on China, provoking tit-for-tat measures now spiraling into a trade war. Bring it on. Bring it on. Let's just get it over with. We could just wipe them off the map. I don't know. That's probably not very Christian, but so we won't wipe them off the map. But those angry villagers, they're coming for the castle. They got pitchforks and burning torches. Yeah, and I'm talking about in China. Hasn't got that bad here in the U.S. yet, nor do I think it will. Hey, you never know. You got to embrace all possibilities, right? Logic 247. We ended up with a good week last week. Where were we at? 12%? I don't know, the week before was 2%. Yeah, I think we were either at 11 or 12% when Valerie did the final recap last week. I posted that somewhere. I'll look at it in a minute. Anyway, we're currently in week 350. Over the last 350 weeks, we've issued over 19,300 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Valerie did the recap this morning at 6:30 a.m. Eastern. She'll, of course, update it again this afternoon, as she does. At the time she did the recap this morning, since the markets opened last night at 6 p.m. Eastern, we issued a total of 11 logic alerts. At the time she did the recap, we were still waiting on the outcome of 3. Those may have resolved themselves by now. That gave us 8 actionable alerts. And so far, nothing has stopped out this week. So, it's kind of early. It's only Monday. But, nice start. No complaints there. Now, the logic alerts are designed to help you learn how to read a chart. You should be able to look at any chart of any market in any time frame, and with the help of our humble indicator set, instinctively know what the next high probability move is. And based on 350 weeks and over 19,300 alerts, we know that about 20% of the time or less, the market is going to do something other than the next high probability thing. So if you're chasing that holy grail where you're right 100% of the time, wow, that is a torturous road to be on. Stop wasting your time, stop wasting your treasure. Just learn to do one thing and do it well. I don't know where that music just came from, but from somewhere. Let me close these little pop-ups. There we go. Now, every logic alert has an entry price, an initial target, designed to help you get your goal for the day. And then there's quite often additional targets, and then a final trade to target. Last Thursday, if you missed last Thursday's broadcast, I walked through every one of the alerts that were issued. So you can go, now today's only Monday, but we can kill 2 birds with 1 stone. That's always efficient. Okay, 2 birds, 1 stone. Here we go. Giddy up. All right. Last week we ended up with a total of 46 actionable alerts, of which 11% were stopped out, or 5. Okay. And so now we're in week 350, and this was the open last night. We had a gap fill short on the ES, a gap fill short on the Dow. A gap, oh no, this was just a short on, oh yeah, this was a gap fill as well on the Russell. We had a gap fill on the NQ. We had a long on the ES. B is buy. T is initial target. PR is potential resistance or target number 2. And of course, the final trade to target is always the weekly trading zone above on a long. On a short, it's the weekly trading zone below. Here's a long on the Dow, long on the Russell, long on the NQ, and then those are the 3 that were still pending when Valerie did the recap this morning. Now the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. as opportunity presents. However, our original alert service, way before I ever dreamed of Logic 247, we had the CTAs, or the concierge trade alerts, and they're different. Primarily, they don't come out around the clock, for one. They're published as a static report shortly after the Globex Open And most days I strive to get them out at 5:55 p.m. as I did Thursday night for the Friday session, which began Thursday night at 6 p.m. Eastern. Okay. Sunday nights, it's difficult for me to get them out ahead of the open. Every now and then I do. So last night, 20 minutes into the first 30-minute candle, all of our members, all of our trial members, had all of these targets: the ES, the Dow, the Russell, crude oil, the NQ, gold, and silver. If you're a member or trial member, make sure you read this information up here. Make sure you understand it, and if you don't, ask. Now, I probably won't be able to get the alerts out today prior to the open this afternoon, this evening, because I have a mentoring session, and then I have to put the new zones on my charts, and I have some other stuff that I have to do on Mondays. So I'll put a note in the discussion group what time roughly. Once I know, I'll give you a heads up as to when to expect the CTAs to be published. All right. So with that said, let's take this down. I'll put this up. And we'll go to the daily chart. And here we are. Okay. We are in a downtrend. Leg and a retracement. A leg, retracement. A leg and a retracement. A leg. Now, see, on this leg, we put in a higher low. So you got a low, got a higher low, got a higher low, got a higher low, higher low. Okay. So right here is where the market opened last night. We've been up almost to the daily BBC, which is like a magnet, along with that 50% reverse fib. And why do I say reverse fibs? Well, in an uptrend, you draw from the low to the high. In a downtrend, you draw from the high to the low. Okay? So, on Friday, we closed above the 38. We talked about that on the afternoon broadcast. We said if we can close above that 38% fib retracement Friday, this is what we talked about during this broadcast on Friday. I said that would be pretty bullish for the open Sunday night or for the Monday session. And as you can see, we've traded, well, number one, we did gap higher at the open. We gapped all the way up to here. We had a green candle all the way up to here. We had a red candle all the way down to here. And now we're stuck right in the middle. Okay. Now the daily charts are important because institutional traders, the ones who actually move price because of their account size, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. So take 2 minutes before you start trading. Get a free look over the shoulder of the deep pockets that move price. See what they're doing, if they're doing anything. Okay. And then with that knowledge, drop to your smaller time frame. Begin your trading. You can choose to swim against the current or with the current. Swimming with the current is a little bit easier. Just put your floaties on and away you go. But if you want to work hard, you can fight the current. It's your trading business. It's entirely up to you. Now, all alerts are created. Oh, and the green line, that's the BBC, stands for bull bear cross. When price crosses above the green line, we're bullish, expecting higher prices. When price crosses below the green line, we're bearish, expecting lower prices. Price always reverts to the mean. In our case, the mean is green. As I just said, we call it the BBC, bull bear cross. Okay. Price always reverts to the mean, or in other words, it always pulls back to the BBC. And the pullback holds more often than it doesn't. Since we began this downtrend, this pullback held, and this pullback held, and this pullback held, and so far this pullback is held. Extremely volatile conditions. Be extremely careful. Okay. All right. As I said, all alerts are created on the 30-minute chart, both the logic and the CTAs. Now, the vertical line separates today, Monday. Back over here is Friday. These are last week's weekly trading zones. The weekly trading zones are published every Monday morning at 6:15 a.m. Eastern. That gives you plenty of time to get them on your charts before Wall Street opens. So any alerts that go out on Sunday night, those are based on last week's zones. So today I have to go through this afternoon, after I finish the mentoring session, I have to go through all of my charts, reset the zones. So that's why I probably won't put the CTAs out ahead of the open tonight. Probably slightly after. Okay, so these zones were published. All the zones you'll see here today were published last Monday morning at 6:15 a.m. Eastern. But the new zones went into effect this morning at 6:15 a.m. Eastern, and all members and all Tron members had them at that time. So now, any alert that goes out for the rest of the week, logic or CTA, will be based on the new weekly trading zone. So here's the gap higher open last night. Okay. We opened right here. Ran up and ran down pretty quick. We're above the BBC, and as long as we're above the BBC, we anticipate higher prices. Now, price rarely moves in a straight line, like as in never. It moves in legs. Leg retracement, leg retracement, leg retracement, leg. But we came real close right there to the target. And then we retraced to the BBC. Then we hit the target. The pullback held. And then we hit the target again. Okay. This candle here. Well, we use this one as an example. Either one. We opened at 54.68 and ran up to the target at 54.87. That's this candle right here. Opened at 68. Just call it 19 points to the target. As you can see, it went further. It went all the way up to 97. Another 10 points. So, you know, if you stayed in it, now getting out at the exact high, that only happens by accident. Okay, because you never know that the high is the high or the low is the low till after the fact. Our high of the session, 54.97.75. So we come back to the BBC, we hit that target one more time. And then blue and climbing turns to red and falling. We're now below the BBC. Now we anticipate lower prices. And as you can see, that gap has filled. Okay. So this doji tells us that we're probably going to bounce back to the BBC. We might not get there because we're about to get a bearish cross. That's when the red line gets below the green line. This is a bullish cross when the blue line gets above the green line. And that is what the short target is based on. Okay, that bullish cross right there. So, finding a window of opportunity, I would let price, if it's going to drop, to about 53.38. Actually, the target's 53.26, 23. So 53.33. That would give you 10 points. From right there down to the target, 10 points. That's your goal for the whole week. Imagine that. All right, on the down. This was the open last night. Right here, we got power on the open. Ran up, ran down. Once balloon and climbing gets directly above price, it becomes potential resistance. Right here, we reached down almost to the zone. What was the low? Yeah, the zone was 30. It would be 995. So that's because the candles are so huge. The average 30-minute candle right now is at like 191 points over the last 14 candles. Now, you can change that. Make it the last 100 candles. That puts it at 240. It's the average true range of a candle. And your goal is to get 2 points a day. Or the Dow, 20 points. Okay, so we just stayed inside of the zone from last week. And we came pretty close to hitting the long target. We missed it by a little bit, but there was plenty of room. This one little candle right here. What did it do? Opened at 868. Ran up to 976. About 100 points. At $5 a point. That would be $500 for contract traded in that candle. As you can see, it closed a little off the high. Now we've gone below the BBC, just like the ES. Blue and climbing has turned to red and falling. We're about to get a bearish cross. So, if we take out this low right here, now, because of this spike, okay, you don't have to worry about this stuff over here. Beautiful opportunity. That's just based on market structure, nothing else. Nothing complicated. Okay, the Russell, what we do? Here's the open. We're above the BBC. We expect higher prices. Pretty much looks like we hit the target to the tick. And that target, of course, was based off of the bearish cross right up here. We've got red and falling, about to get a bearish cross. We're below the BBC. We expect lower prices. Right here, this bullish cross, that is the short target. Okay, so you want to let price break below. Now, so you don't have that spike that you had on the other chart. So in drawing your window of opportunity, you're going to be a little more careful, and you're going to come down here. Something like that. You got to get well below that low, okay, before you commit. So what are we talking about? 1852 to 1845. It's 7 points. Only takes 2 points with the Russell to get your goal for the day. NQ, all the indices are looking the same. You'll find over time that's pretty much how it works. Gap higher open last night. Went a tiny bit higher off the open, and then bang. So we hit the zone. When price drops to a zone, we expect support till proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. Okay. So we got resistance at the zone. Now, only one of three things happens when price encounters a zone. 70% of the time, consolidation. 20% of the time, rejection. 10% of the time, the slice. Okay. So we do have the bearish cross already on the NQ. Overhead, the step line's potential resistance, red and falling's potential resistance. And looking over here, 18,6, go a little more, 18,670 to 18,660 or 650. That'd be 20 points. That'd be $400 per contract traded. Crude. This was the open last night. Price always reverts to the mean. The pullback held. It holds more often than not. But we came just a little bit shy of hitting that target, which was based off this area right here. Okay. But plenty of room to get your goal on the way up. This candle opened at 61. We'll call it 61.75. If it had made it all the way to 62.75, but it didn't. 61.75. It's almost $1,000 per contract traded right there. Now we came down and we almost got the short target, which of course is based off this bullish cross right here. But it's not done. We're just now getting the bearish cross. You got to understand when you're there's two huge differences between what goes on in the morning in the live training room, which is trading the mechanical model. You got a fixed set of rules. You follow the rules. End of story. Discretionary trading is a whole nother ball of wax. Okay. When you start trading larger time frames, if you move your stop to break even as soon as you get a couple ticks, well, only one thing's going to happen. You're going to get stopped out. Discretionary trading, as per the logic alerts or the CTAs, the maximum risk is $300 per contract traded. But you never trade more than the potential profit available in the trade. If you're planning to get out with 2 points, then you can't risk more than 2 points. Okay? It's a whole nother world. Make sure you learn the mechanical model before you start trying to figure out the discretionary method. Okay? So we missed both targets by a little bit. Gold. Here's where we opened. We managed to overcome red and falling, got above the BBC, and we came just shy of that target. We got to 32.61.60. But this green candle alone, 32, we'll call it 45, ran up to 59, $1,400 per contract traded in that one candle right there. Then price gets below the BBC. We get a leg, we get a retracement, pull back holes, and that sends us down to the short target. Once we hit the target, that bounced us back up to the BBC. Resistance. We expect that to be resistance until proven otherwise. And that sends us back down to the target. Support. Now it's like we're going to bounce back to the BBC again. Now as you can see, the pullback, whether you're pulling down from above or pulling up from below. The pullback holds more often than it doesn't, but eventually it's going to trade through. So you have to be patient. Let the candles do their work. And you're always looking left. If price were to suddenly overcome the BBC, you've got potential resistance here, 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 then up here at the target. Silver. This was the open last night. We dropped to the BBC, consolidated for hours, red and falling, turned to blue and climbing, and that took us right up to the target. What was the high? 32.38. Oh, we missed it by a penny. How about this time? Penny and a half. And this one I think overshot it. Nope. Still missed it by a penny. You only need 2 pennies to get your goal for the day. This candle here opened at 32.18 and ran up to 32.29. So that's $550 per contract traded in that 130-minute candle. You got the perfect stack. Price, step line, blue and climbing. And once that step line crosses, that's when you expect the retracement to the BBC. And this time, see, after all these times of holding, finally traded through. But then when it retraced, the pullback held and held and held, and so far still holding. I would look for further movement to the downside. You can be as conservative as you want to be. 31.72 to 31.70. That would give you your goal for the day. So on the daily chart, one more look. Support below us at the 38% reverse fib, and then the black step line, and then red and falling. Those are potential support because they're directly below price. Resistance overhead, again, BBC, 50% reverse fib. Once we overcome that, we've got a gap right here that never filled, and that's really unusual with the indices. Okay, so once price gets into this area, look out. What's the low of this candle? 66.25. What was the high here? 64.75. No, we did close it. Okay, that little wick right there behind it, I couldn't see it. Yeah, we closed it by like 2 points, I think. Okay, so there you have it. Michael should be here. If you want to become a member, go study up at mytradingiq.com. A lot of content there. And then when you're ready to become a member, send an email to support@cfrn.net. In the subject line, put "I want to become a member." In the body of the email, put your name, put your phone number. We're not going to call you, but we will send you an email that explains what it means to become a member. And we'll provide you a link to click so that you can become a member. Get 2 hours of live training every trading day in an interactive environment. On top of that, you get private one-on-one mentoring. The strategy you learn, the indicators that you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. That's how markets work. As a passport holder, you'll get the Logic 247 alerts around the clock. Get the concierge trade alerts the second they're published each evening, whether it's 5 minutes ahead of the open or after the open. I will always strive to put a note in the discussion group letting you know whether to expect them ahead of the open or not. I've already told you today I probably won't be able to due to time constraints. Every Monday morning at 6:15 a.m. Eastern, you'll get the new weekly trading zones. We've published the zones for our members since December 14th of 2009, so a little over 15 years. Once they're published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They don't change in any way whatsoever. As a passport holder, you're able to attend the members only workshop every Thursday night. And you get the golden key that opens all the private channels in Telegram. We got public channels, we got private channels, but as a passport holder, you got access to everything. Everything a trader needs. All under one roof, one low price. All right, let's see if we can find Michael. He's past his best used by date or time. Maybe he's struggling to get logged in. And again, Trump's meeting right now with President Bukele. Who knows what will come out of that? We shall see. Michael, are you there? Michael's not there, man. Okay, let me send him a message. See what's up. He says he's on his way. All right.
Hey, here I am.
And here he is.
All right, let me put my name in here, then I'll take it over here. And all right,
Trump's meeting right now with President Bukele from El Salvador.
El Salvador.
They're the
ones who are
the first country to make Bitcoin legal tender.
Sweet. Still waiting for all this stuff to hit, like our crypto. I think right now is a buying opportunity for crypto too.
Oh, Strategy added 285 million today. MetaPlanet added, I forget how much they added on Friday.
Yeah, this is
big boys are buying the dip.
I totally agree with all of that. In XRP, I bought a bunch of that last week under $2. All right. Ready?
Right, you ready?
I am ready.
Okay, I can't see your screens yet.
Oh, you can't? I didn't share it?
Oh, they are. Oh, they normally pop up on my big screen. Yeah. Let me move it up here. Hang on.
Yeah.
There we go. All right.
Okay.
Now those folks on YouTube can see it as well. All right.
Excellent. Here we go. Good afternoon, everyone. Today is Monday, the 14th day of April, 2025. Now, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. No credit card required for the trial. Click on that. It's going to bring you to this registration page. Just fill it out. Make sure down at the bottom here, you give us your TradingView login ID. Okay. If you don't have a TradingView login ID yet, click on this link right here and get one. All right. It's pretty easy to get. And if you already have data that can be streamed into TradingView from your broker, that's great. If you don't, pay the $7 a month to get the real-time data. Okay. You get real-time data for $7 a month. All right. All right. Now the spreadsheet, we had a pretty good day today. We're back and forth. We didn't have any real stars, but we didn't have any that were bad either. We stayed on the 19 range for the ES, and I missed a whole bunch of trades today. Otherwise, I would have been better than 87 ticks, but still 87 ticks is nothing. Nothing to snicker about. All right. If you're going to read the spreadsheet, I think I said this already, you got to read all the CFTC risk disclosures, and I have to say that every time. Today is the 14th day of April 2025. We made 37 ticks on the Russell, 70 ticks on gold, and 87 ticks on the ES. Put us at 1972.5 on the morning session. That is with one contract. And today it took 3 minutes and one trade to get to the goal for the day. At that point, we're up $1,500, and we took a total of 33 trades. So on the month now, we are at $19,370. That is over 8 trading days, averaging $2,421 per contract per 2-hour trading day. On the year, we are now at $103,657 over 61 trading days, averaging $1,699 per contract per 2-hour trading day. If you were to quit trading when you get the goal for the day and you would add one contract per month, so far this year, you would be up $21,832, and you would only had to work 8.38 hours to get there. So that puts you at $2,604 per hour. All right, that's following the 24/20 blueprint, which means you start out with one contract and you earn $2,000, or basically one contract per month, $100 per day. And you quit trading when you get that $100 per day, and you add one contract for every $2,000 you earn. So it basically works out to one a month. Be trading 4 contracts right now, and we're halfway through the month. You'd be up $4,800 so far this month. Halfway through the month, it's been, when you're doing it that way, when you quit trading when you get the goal for the day, you don't end up with the huge days like we had on Friday, but you do have some mornings that are really good. And your goal is to make this number with one contract. If your goal is $100, to make the number in this column be 100. With 4 contracts, that would be 400 every day. So that's what you're shooting for. All right. Now, let's get into the trades that we did. Let's start out with gold. I want to see who's in here. Dan, did you make it in here? We had that impromptu meeting during the break. You did make it in here. Good. Okay. So I kind of want to look at something really quick, Dan, from what we went over. See this leg up and this retracement right here? This is more than 50% on the retracement right here. So I'd want to see it go all the way down here, right there where it is right now. Now, if it came out of here, this would be a good place to buy it. If it came out of here right now. If it goes any deeper than here, then I'd be a little suspect. But this would be a good one to buy, because the retracement of this, even if it only does a 50% retracement, it starts to turn down. The retracement should be up to here. All right, that will be enough to get your stop to break even. All right, that's on gold right now. Do I even have gold open right here? I do have gold open. So that's on gold right now. So even if it does a 50% retracement of this, it should put it up here, which will be enough to get your stop to break even. Okay. That's what we were talking about during the break. That's it's really close because the pullback's not very deep right there in that particular one. But let me blow it up and I'll get into what I did here in just a minute. I know Dan and I just had a meeting about this, so I want to show you. So the 50% retracement is right here. So if your entry is right here at, we'll say 24.3, then 50% retracement is up there at 24.7, 24.8. That's just barely enough on this leg to get your stop to break even. That's what I was saying. This one's not really a very deep one. That's why it's not the best, but the 100% retracement of this pullback right here is what I was thinking would be a good spot for that to get down to, and for it to be a good spot to buy. It almost got the 100% there, but right now, if you took the trade, you'd be looking to get 5 ticks in profit on this to move the stop to break even. All right, 5 ticks in profit is what you'd be looking to get. So the entry point was there at 4.3, and it ran up so far to 4.7. So it ran 4 ticks into the profit so far. But that's what I was saying to look for. Those little nuances. Like this almost went 100%, so it's not the optimal trade, right? If it did go the full 100% and it bounced there, that would be better. But, and you have a similar thing happening here with the Russell. And over here with the S, this was a pullback right here. Now it almost did 100% retracement right there. It's pushing down right now. See what I mean? Okay, so let's go here. Now, I'll get into all that in a few minutes, all right? But this goes back to what we were just talking about in that meeting. Let's go back to the beginning of the time here, the beginning of the day on the gold. Okay, here we are at the beginning of the day on the gold. On the gold, our first trade on gold was 25 ticks. Hey, that was a good start. We had 25 ticks. And this one right here is one that I screwed up. I ended up losing just a few ticks on that. I should have had my stop at break even sooner. And I moved it too slowly and I ended up losing 2 ticks on that. So that put me down to 23. All right, then I had a small win there. They got me up to 28. Then a stop out there. And let's look at this stop out. This is kind of, see right here where it failed to move up, this was a mistake. I shouldn't have taken this trade right here. And this one here that failed to move up, I should have stopped out on this one right there. Maybe I did actually stop out on that one right there. Maybe that's probably where the arrow belongs because that makes sense. This one over here doesn't make any sense. This is where I stopped out. That makes sense. Okay. And this is kind of the situation that I was just talking about, Dan. If you look at this, you see this leg length right here. So because the leg length is so small, it's tough to have any kind of a good partial retracement of that, right? Because 50% puts you right about here. So if it doesn't do 50%, but it doesn't do 100%, then it's going to put a spot in here where it's going to 100% will be just enough to stop you out. All right. So that's kind of an odd. It's not the best scenario. The one that I showed you earlier, like this one right here, for instance, is one of the best looking ones right here. We have, this is your leg down, this is your retracement right there. Okay, if you do this the other way, and you put it like this, this is, oops, sorry. This is your leg down, and there's your 50%, bam, right on the dot. That's the kind of trade you want to have right there. And if you don't get the 50%, this one right here, it's 100%. That's what you want to have. Okay, those little nuances about where to pick the trades, you know, you'll learn those things over time. But anyway, I stopped out on this one, and that brought me down to 13 ticks. Then I had some profit on that, got me to 24. This was the market's got a little choppy in here, so I threw this back on here, and I took a long trade in here based on that, and I ended up getting some profit on that. Went from 13 to 24 to 37, and then here we went from 37 to 49, and then 49 to 51, and 51 to 65, and 65 to, there's a stop out in here somewhere. We went from 65 to 50. So there's a stop out somewhere. This might be the stop out. It doesn't look like I counted that one. Or that one. It doesn't look like I counted those two. Because we went from 49 to 51 and 51 to 65. And then 65 to 50. And then 50 to 65 again. And then we went to 65 to 70. I'm sorry, 65 to 68. And then we had a break even. And then 68 to 70 right there. And then another break even right there. And that's where we ended up for the gold. But let's go look at what it's doing right now. Okay, this, if it would have stopped right here, Dan, if it would have stopped right here, this would have been a perfect entry opportunity, but it kept going down. So now you swing lows all the way down here. This is okay because right there is enough to get the stop to break even. Okay, so this was okay entering right here at the 50% level. When you look at it that way, look. It's almost exactly 50% where the entry was, right? Right here at 50% was your entry. So you expect it's going to get up here to the prior swing high to begin with, all right? So right there, you would have just locked in 10 ticks probably, and then probably some more. It should complete this leg length right here, right now. That's what it should do. Okay. So for all you guys that are listening to this right now, this was all part of what Dan and I just discussed in the meeting that we had. And this is good stuff to know. There's doing things exactly based on the opens and closes and all the rules. And then there's understanding what the market should do. Knowing what to expect out of the trade helps you manage a trade. So right there is how far that trade should have gone up. So right now it should pull back to right here. Right here. That's how far back it should pull. So if you happen to get down into the oversold while it's right down here and it comes out of the oversold, like this one came out of the oversold right here. If it happens to get down to the oversold and you get an entry right in here, that would be perfect for this scenario right now. Okay. And you should look at every trade that way. When you look at the trade, look at what the leg length was. Look at what you should expect from that leg length for a pullback because you're entering on a pullback and see where the pullback entry is going to be. When you have an entry, look to see where the next swing high is because that's what you expect out of the trade. Is there going to be enough room from your entry to the swing high to get your stop to break even? Okay. Anyway, that was gold today. There, Dan. That was a whole other meeting, wasn't it? Just about. Hang on. Let me go back to that in a second. Let me just get the Russell stuff done. Okay. Oops. Oh, what did I just do? Oops, I didn't mean to do that. Here we go. All right, let me go answer your question while I'm right there at that point on this. The blue vertical bar, that was this leg length right here. Okay, that's what that was. From here to here was this leg length. I tried to draw a straight line, but it got wiggled on me. But it's basically from there to there is what I drew. If you take that and extend it over here, that's what you're looking for. And that's exactly what you just got. So now a 50% retracement of that would put you right here. So a down close on this bar is going to get you into the oversold. Now the problem with that is if you get a down close on this bar and it puts you into the oversold, then the next up close, if it doesn't drop down like this one did first, if it doesn't drop down and give you a close at the top of the bar, it's going to give you a close up here somewhere, pretty close to the prior swing high. Okay. What do you mean, where is it on the bar? It goes from the low of this bar right here to the top of this bar. That was the leg length. So that's what you're expecting to repeat from the low of this bar to wherever that goes in space. Right? That's what you're expecting to repeat. So right now you'd expect the same thing here. Okay. All right. So now let's do the Russell. Okay, so on the Russell, we ended pretty close to the low of the day on the Russell once we got going. My first trade was a +2, then next trade was a +10, that got us to 12, then we had an 18 to get us to 30, then we had a 30 to get us to 60, and then we stopped out -25, back down to 35. Then we went up to 45, then we had a pretty big trade there, got us up to 82. And then we stopped out again. This one this is the one I told you, Dan, in the meeting, I told you I marked it in orange because this was one of the ones that what I was just explaining to you a minute ago. The pullback the actual leg length is pretty small. So the pullback happened here. The pullback got to the 50%, but the close was way up here. And the room from here to here was not enough to move the stop to break even. Okay. And I took the trade anyway. It ended up stopping me out to the tick pretty much over here. That's what I was talking about. If the pullback is pretty shallow and the move from the entry point to the prior swing high is not enough to get your stop to break even, unless you're in a really strong trend, and we weren't, unless you're in a really strong trend, you might want to just skip that trade. And that one stopped me out. So when I stopped out on that one, that was the Russell. That put me back down to 57. Then we went to 62 right there, and then we had a break even, and then we stopped out again and put me down to 37. That was where we ended it for the Russell. Okay. And look at all this chop in here. So when it gets choppy like that, if you want to just throw this on down here and trade the divergences, there's not that much more. You had one divergence trade right here that would have worked out because you would have been buying the open of this bar, right? You're not buying at the top of the bar in this case. You're buying at the open of the bar, right? So there would have been just one more trade in there. All right, and that was the Russell. So now the ES. Let's look at the ES. All right, on the ES today, we ended up with 87 ticks, but we started out here the very first trade. This is where we got the goal for the day. We got 12 ticks on that first one. And then we had 20 ticks on that one to get us to 32. And then 12 ticks on that to get us to 44. Then 20 ticks on that to get us to 64. Then 2 ticks to get us to 66. Then 10 ticks, it looks like, to get us, or maybe 4 ticks to get, 4 ticks to get us to 70. Then 20 ticks to get us to 90. And then finally we stopped out. That brought us down to 65. Had a break even, and then we went to 81, and then 85, and that's where we, almost where we ended up. We had one more trade for 2 ticks somewhere. That got us up to 87, and that is where we ended it on the ES. Okay. But let's just go through these things bar by bar here. Okay. Let me get rid of this. Well, let's just go to the end, and we'll just do it in real time. Okay. We'll just do it in real time and do the analysis in real time. See, you're in a bunch of chop right here. Below the YBR, so an aggressive short trade right here is something that you might want to consider. Aggressive short trade with the trend, right? In that case, you don't have to wait for the down close. You just short it right here at the top of the bar at the open because you're in chop, right? That is one thing you might want to consider. If you're going to trade the conservative trade with the trend, you're going to wait for it to give you the down close and come out of the overbought, all right? That would be the conservative trade with the trend. Now, let's see. This pullback is now 100% of this leg, all right? So you're at 100% marker right here. And if it comes out of the overbought right here, it's going to drop down to about right here on the down close out of the overbought. To get to the swing low, you have all the way down here, which is plenty. To get to the 50% retracement, you only have to right here, all right? You're in some chop, so it'll probably go through the 50% retracement, but right here, it stopped at the 50% retracement of that leg. It was almost a prior swing low right there, but it wasn't this one. It was a 50% retracement of that. So basically, you're in chop right here. And if you want to trade aggressive, you might want to put this back on and see if you have separation. You do have some separation in here. It's going to flip the YBR over right now. See how it hit the YBR right there? If the YBR was extended, it would have hit it. When this bar closes, whether it's an up or down close, it's going to flip the YBR. Okay, just so you know, that's what flips it. When price touches it is when it flips direction. All right, so Wesley, I have that meeting with you coming up too. All right, so we're waiting. And you see this right here? has done 100% retracement and then some. A 50% retracement going down right here would bring it to about right here. It looks like it's kind of doing a direction change, so that would be good right now. Because it hasn't hit the YBR yet, it's not going to change directions on the YBR. So if you get a down close on this, that would be an okay trade to take. But if it goes up one more tick, it's going to hit the YBR and it's going to change directions. And there it is. Okay. So Dan, I don't know if you read the article that I wrote about trailing stops and the different kinds of chop. But when you get something like this in the middle that the range is shrinking, you're in a triangle. Okay, now that's not the worst kind of chop, but it's not great. You know, where you have lower highs and you have higher lows like that. Kind of best to wait till it gets out of that and you have some range. Okay. Hey, and go to meeting today, we were able to look at your desktop. I wasn't able to take control of your mouse, but we're at least able to look at your desktop and go to meeting while you're on the web. That was a good thing. See, this did flip it up. So now we want to see a retracement down to right here would be perfect. All right, let's just draw that in ahead of time where we want this to retrace to. Right about there. It'd be a nice spot. All right, and look at it. It's going to be 2 bar lengths, right? So this will be 1 bar length. This will be another bar length. That'll get it right about there, right? There's 1 bar length. So we're not in a strong trend here. So if it does give you an up close right now, it's not going to pull out of the oversold or anything like that. It's going to be chop. Right? There's your up close. You didn't come out of the oversold, so it's not really a meaningful close. Sorry. So we're still looking for the same pullback. Same spot. Just move it over a little bit. The market's really slowed down here. Seems like I could bump the S down to a 7 range right now. Maybe have some trades in there. All right. Well, what time is it? 1:24. We have about 6 minutes left, maybe 5 minutes left. We'll see if we get any more trade setups. I don't know that we're going to. Everything's choppy right here. We might get some. We might not get some. Don't know. All right, so we're in the oversold. Now, right here is exactly where I don't want to trade. All right, if it gives us an up close and pulls out of the oversold right here, we're going to be too close to the swing high. There's already resistance right there. So this is exactly where I don't want to trade right now. Okay, I'd rather see this close down and give us a flat spot down here. maybe even 2 down closes and give us a flat spot. That's what I'd be looking for right here. All right. You see that, right? We're not in a strong trend. There's the up close. It came out of the oversold. It almost went all the way up into the overbought. And the only way I'd want to trade this is if I could buy it right down here. See, Jen, this is one of those scenarios where you say, how did you get filled way down here? This is how. The only way I'd be interested in trading this is at the bottom of the chop right here. Buying it at the top of the chop is not something I really want to do. See, there's a slight chance that this leg up could get repeated from right here. A slight chance that the leg up could get repeated from right here. You know, that this consolidation is happening after this leg up, and it's going to be doing another leg up like that. But it's not a high probability setup. You see what I mean? So a down close on this would get you down to about the right spot and would get you in the oversold. That would be much more appealing to me right now. Remember what I just said a minute ago? The only way I would go long on this up close would be from down here. If it gave me something down here, yeah. If it got down to this level and then popped out of the oversold somewhere in this area right down here, so I still had plenty of room to get up to the prior swing high, then yeah, I'd be interested in that trade. That's what I'm hoping is going to happen. There, okay, we're getting a little closer to it. Now we're in the oversold. If this bar goes down here, now this bar can actually go down here and close back up here. If it does that, I'd be interested in that. Okay. This is borderline right now. If it were to just give an up close and pull us out of the oversold, it'd close like right here. Do I have enough room to get my stop to break even between there and there? Right? What I'd like to see is what it's doing. I want to see it go down deeper like that right there. Perfect. Now, close back up here at the top would be good, or a close down here would be okay, but a close back up at the top on this bar would be good. Okay, we've hit the level that I wanted to hit. So now when I'm close on this bar, I would buy. All right, so now this bar has gone right into the level. That's fine. And it can actually even go down deeper. It can go all the way down here as long as it closes back up here. Okay, because if it closes up here, it shows buying pressure right here at this level. So right now it's got a low here of 73.3. So I'd be buying 75.3. 75.3. Here's my order. It's on at 75.4 by accident. 75.3. Here it is. All right, I'm going to buy right here. I'm in. Right. So this is exactly what I'd be looking for. 10 ticks in profit. Bam, there it is. Now I'm going to lock in 10 ticks in profit. Well, I was going to lock in 10. I think it put me on to 5. But that's exactly what I'd be looking for. Right there. Okay. Does it have to close above the 50%? Well, it doesn't have to close above it, but you don't want to close down here. Right? This should make it up here to the prior swing high right now. I was being pretty aggressive with it because we just ran out of time. But but it should make it up here to the prior swing high right now. That's what it should do. All right. So if I had my full stop on my full target on there, it should make it up to the full target. Try to let it run. But you don't want it to close down here, right? You don't want to have an up close that's all the way down here, because then you're in like no man's land right there. It could do the 100% retracement, which would stop you out to the tick and then make the run up. Okay. So those are just nuances of what to expect out of the trade. This is exactly what I wanted. I wanted it to come down here to this level and give me a trade off of this level that still had room to make it up here to get my stop to break even or lock in some profit. Okay. And so it did that. And you can see right now, this happened this morning. One time this morning, I showed you guys this morning when it was happening, where you're in your trend like this, and then it goes up like that, and then it comes down like this, and then it goes up like this, and then it comes down like this, and this is the top of the trend right here. That's what's happening right here. All right, if it goes down below this level right now, that's what's happening right here. This is what's happening. Okay. All right. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Click on the purple button. It's going to bring you to this registration page. Just fill in the form. Once you fill in the form, down here at the bottom, we ask for your TradingView login ID. Make sure you give us that. If you don't give us that, you won't get the charts. All right, do all that, and we'll set you up and get your indicators indicating. That is it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. And there it is.
Okay, recap of the morning session.
Today, it took 3 minutes and 1 trade to get to $1,500 with 10 contracts.
Good job.
Thank you. Thank you very much.
All right, guys, we'll take one last peek at the daily chart. We've covered everything that needs to be covered. And here we are, still sitting in that spot. We're right between the 38%, reverse fib, and the 50. The high of the session almost touched the daily BVC. Not quite. So we're just kind of stuck in the middle, sort of a lackluster day. Now the volatility is huge. So when you put it on a daily chart like this, it may not look like so much, but I went over with you earlier. The average daily range over the last 14 days, 245 points. Over the last 100 days, it's 102 points. Okay, so very volatile market conditions. Be careful. We've already covered all of this. You know to send your email here if you want to become a member. If you want to study up, go here. Let's wrap it up with our good word for the day. Fear is the enemy of growth. Exodus 14:15. Tell the children of Israel to go forward. If you want to grow, you need to get over any fear you may have of making mistakes. American author and professor Warren Bennis said this: a mistake is simply another way of doing things. So expect to make mistakes along the way and embrace them as a sign that you're going in the right direction. With the Red Sea in front of them and Pharaoh's chariots behind them, the children of Israel panicked in Exodus 14:15. And the Lord said to Moses, "Why do you cry to me? Tell the children of Israel to go forward." When they did, the Red Sea became a pathway to victory and a burial ground for the enemy they feared. Now, please pay attention to who had to move first. If you're sitting waiting on God to move, you got to switch that dynamic. You got to move. If your electric bill's due, sitting on the couch and praying about it, you know what that'll lead you to? Praying in the dark. True story. Get up, get moving, do something so that God has something to bless. Money doesn't fall from the sky. Trust me, I look up every day. A lot of years never saw it happen. Now, if you have to find the best way or the perfect way, you'll never get anywhere. It's like driving on an unknown road at night. Ideally, you'd like to see your entire route before you start out. Instead, you see it little by little. As you keep going, a little more of the road is revealed to you. So if you want to see more of the way, get moving. Make a commitment to yourself to start on your growth plan and keep at it for at least 12 months. If you do, you will develop a love for the process itself. And at the end of the year, you will be able to see how far you've come. Isaiah 54, verses 2 and 3. Enlarge the place of your tent, and let them stretch out the curtains of your dwellings. Do not spare. Lengthen your cords, and strengthen your stakes. For you shall expand to the right and to the left, and your descendants will inherit the nations and make the desolate cities inhabited. Sounds an awful lot like the prayer of Jabez, doesn't it? Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. As I said at the beginning of the broadcast, the part of the GoTo platform that has the intro and the outro did not upload. So this is the point where it would normally play the pretty little tune and tell you that the best investment you can ever make is investing in a human life, and would also caution you to always check with a licensed investment professional before making any investment decision. See you guys tomorrow.